very good evening, respected dignitaries. 30th of December, a day before this year ends, and a new dawn is waiting for us, 1st of January 22, wherein we are, as professionals, expected to really achieve more professional heights. 30th of December, a program on Code of Ethics. It's a proud privilege of Nagpur branch, for me as Chairman of Nagpur branch, C. Saket Bagadia, to host this prestigious VCM organized by Ethical Standards Board on members in practice and taxation services and NOCLAR under the Code of Ethics. I convey my heartfelt thanks to the Chairman of the committee, C. Prafulla Chhajer sir, and the Vice Chairman of the committee, C. Kemisha Soni, to be kind enough for allotting this conference, this VCM, to Nagpur branch. Friends, ethics is the main lifeline of our CA profession. The two alphabets which we use, CA, these alphabets are denoted as alphabets of trust. The only reason behind that these alphabets, these two words, letters are denoted as alphabets of trust, the basic reason is that we all are binded by a code of ethics, and these code of ethics have been framed with a lot of deliberation, discussions, and that is the reason we stand apart from all other professionals in the country. It is very essential for all of us to know all of this code of ethics. We have got two excellent speakers for the session, C.A. Sana Bakai and C.A. Asim Trivedi ji. I welcome both the speakers to this forum. C.A. Sana Bakai is going to speak on members in practice in taxation services, and Asim ji is going to speak on NOCLAR, that is a responsibility to non-compliance of laws and regulations. Friends, both the topics are very, very, very important and relevant in today's context. Agreed that with the increasing responsibilities, we are required to follow more procedures so that all the things go in a proper phase. That's the reason that the key takeaways for this this VCM are that taxation services to be provided by the members in practice, range of taxation services which can be provided to audit clients, evaluating the level of threats created by providing any tax service to an audit client, responsibilities of professional accountant in relation to NOCLAR. When I'm using this word NOCLAR, many times this happens, but NOCLAR means like it's responding to non-compliance of laws and regulations under the Code of Ethics, addressing the matters of non-compliance, documentation in relation to non-compliance or suspected non-compliance. Friends, a lot of things are there which are going to be key takeaways for all of you. I wish all of you a very, very happy learning, and we would definitely await the address of the Chairman of Ethical Committee, C. Prafulla Chhajer sir, and the Vice Chairman, C. Kemisha Soni, who would be joining in some time. We have got our first speaker for the first session, C. Sana Bakai. I would request the Vice Chairman and Vikasa Chairman of Nagpur branch, C. Jiten Saglani, to kindly introduce the distinguished faculty to the audience.
Thank you, Chairman sir. Friends, we have C.A. Sana Bakai as the esteemed expert today, who will be talking on the subject matter, and I'm privileged to introduce her. She's a dynamic professional with over 15 years of experience as a chartered accountant. She's also company secretary and LLB and BCom honors from Delhi University. She's well versed in the field of education, and she has taught audit to CA intermediate students, authored books on auditing for CA intermediate, and co-authored books on direct tax modules, summary module, MCQs, and question bank for CA final. As a guest speaker, she has delivered lectures on various topics of income tax to chartered accountants in CP study circles and different bar associations. She has also delivered numerous motivational and counseling sessions to students as well. Among various other membership she possesses, she has an honor of being the founder and chairperson of the IIA Delhi Chapter Women's Circle in the annual Delhi Chapter Conference 2019. At that esteemed position, she has done a remarkable job by bringing into limelight the contribution of women towards the profession. She is currently Secretary of IIA Delhi Chapter. She is also the lifetime member of the Institute of Directors since 2018, and she holds the office as the Chief Editor of IIA since 2020. She is also a regular writer having contributions to several articles for professionals and students of chartered accountancy. And she has valuable experience in representing before various income tax authorities to ITAT, up to ITAT. Friends, please do welcome the speaker of today's session, Sana Bakai. And thank you so much, madam, for consenting and being here on this forum. Thank you so much.
Thank you, Jiten, sir, for welcoming me for today's session.
Thank you so much, Jiten. I feel it's a privilege for us to have a learned faculty who herself is a teacher, because a teacher who can teach you the things in the form she teaches to students would be really lovely for all the participants to learn. Welcome, Sana ma'am. On behalf of Team Nagpur branch and Team ICI, wherein we have got Sri Rashmi Jasoria ji, the tech support guy, and Mr. Shankar also joining in the meeting. I wish all of you a very, very happy new year in advance. And as we look upon Sana ma'am to start her presentation. Sana ma'am, over to you, please.
And thank you so much, sir. Is my screen visible to all? Thank you. So today's session is actually really very interesting, that while we are amidst this last date for the income tax filing, and we are talking about what exactly are the services which a member in practice can undertake. This is specifically for the audit clients which they're handling. Of course, there's no restriction in all of the cases where taxation services are offered by a chartered accountant. Be it in practice or otherwise, there are certain restrictions in the code itself. So when we talk about the specific provision on which I'm going to deliberate today, so basically the new code of conduct has been introduced in 2019 with effect from 1st July 2020, which is in effect. However, there are three provisions which were kept on hold because of the COVID. One is this taxation services. Another one was on NOCLAR, on which we're going to listen Mr. Asim Trivedi post this session. And there's another one on the services, fees and services. So these are the topics which these three provisions will be effective from 1st April 2022. In view of the ESB notification, which was published on 26th of July 2021. So that has been deferred, and now it will be, since just another 3 months, that is going to be effective, and we all need to follow this. So in my session, we'll be covering the general application of the code. I'll just give a brief about the new code and the framework, how it is going to work, and what are the basic safeguards and the threats which are there. Then we'll talk on the taxation services, which is permissible to be provided by members in practice to audit clients. Then there are certain tax services like return filing, consultancy, representation. We'll discuss each and every service in detail. What are the consequences and the effect of the new code of conduct. Then evaluating the level of threats created by these, and finally we'll move on to the tax audit and basically the limit for the chartered accountants and the CA firms, so members and CA firms both. All the questions which you will be having, you can share it once we'll finish this discussion, because I'm sure I understand that a lot of questions will be coming in your mind while we'll discuss, but I have planned the presentation in a way that almost most of your questions will be answered in the due course. So I'll take up all the questions once my presentation will be over. So while I talk about the general application of the code, there are certain fundamental principles which is laid down in the code of conduct. So the last code of conduct, which was issued in 2009, and then it was revised in 2019. The brief background of the revision is that, as you may know, that ICI is the member of IFAC, and IFAC has created one ethical standard board, which is it's an international ethical standard board, and it applies to all the member countries. So India, ICI being one of the member country, has adopted the IASB code and changed the complete code of conduct in India as well, which started application, which applies on all the members in practice since 2 years back, and the few provisions will going to apply from this April 2022. So when we talk about the fundamental principles, the professional accountant is required to comply with the following fundamental principles. The basic 5 principles which we must have learned long back while we were students as well. So the basic is, first is integrity. Integrity is what we have to, the opinion which an auditor, as auditor, we have to, basically while forming an opinion, we have to be unbiased. Integrity is one of the most important aspect of the code of conduct. So while we talk about integrity, it's being straightforward and honest in all professional relationships. All professional relationships, when we say, then it includes audit as well as non-audit services. Second important principle which we need to follow is objectivity. Objectivity means that we should not be biased. There should not be any conflict of interest or any undue influence of others to override the professional judgment. So while we work, while we talk about the objectivity, it's all about getting non-biased towards our professional work. The third and very important principle is the professional competency and due care. Maintaining the professional knowledge and skill at the required level to ensure that a client or the employee, the person of whom we are having that information, the confidential information acquired as a result of our professional engagement, it should not also be used for our personal purposes to gain any kind of advantage. It should not be used for ourselves or for the third party. Fourth, the fifth one is the professional behavior. So when we talk about the professional behavior, we should comply with the relevant laws and regulation, and we should avoid any action that discredits the profession. The profession is actually very important and prestigious, with the degree of chartered accountant which we all are holding is really very prestigious, and we have to maintain the dignity of our profession. The professional behavior is very important to deal with while we are dealing with either with clients or with our employers. So there are certain threats which we face while we are in compliance of the fundamental principles. So these threats could be the self-interest threats. So self-interest threat, what exactly it is? Self-interest threat is that while we are conducting or doing any assignment, then we have our own self-interest which lead to misjudgment or the biasness, which impair our objectivity or the integrity towards the assignment which we are handling in our professional capacity. So we have to ensure that these threats which is there, we have to overcome these threats. We have to safeguard ourselves from these threats. Second is the self-review threat. As you are already aware that we really can't review our own work well, because whatever we have done, we assume that we are always correct. How can we review our own work with objective of finding any error or anything from that? Even in our office, it is very common that whatever we need to review, be it for the audit or even a tax assignment or anything else, We ask someone else, our juniors, to prepare, and then we review their work. It is much easy because we always have a preset mind condition that the things which we are conducting, the way we are doing our work is correct. So while we are doing any assignment, so that is one of the very important thread, the self-review thread. So the code always prohibit you to do anything which you need to review yourself at a later stage. Third is the advocacy threat. So what exactly is the advocacy threat? It actually means a member will promote the client interest. They will become their advocate or position to the point that the objectivity or independence is compromised. The objectivity and the independence of the chartered accountant is compromised. So it may occur when the CA promotes a position or the opinion, which is subsequently impair the objectivity. Fourth is the familiarity threat. Familiarity threat, which may include when, because of the relationship and the professional accountant becomes too sympathetic to the interest of others. So like while I'm dealing with one of my relative or very good friend of mine, so the familiarity threat will be there, because there's something which is beyond the professional assignment, and we have to work on all these things. We got a little emotional. We cannot find out, we really cannot highlight their mistakes and all. The fifth threat which we have is intimidation threat. Intimidation threat, it means it will occur when the professional accountant or the chartered accountant in this case may be deterrent from acting objectively by threats, actual or perceived. So these intimidation threats are basically important to understand that our objectivity should not be impaired. The objectivity, and we should not be biased in any case. So there are certain safeguards which is available in the code itself, which is provided in the code, that we should follow these rules to safeguard ourselves from these threats. First is education, training, and experience requirement for entry into the profession. Educational training and experience requirements are basically that we need to upgrade ourselves from different. So while we entered into the profession, we have learned all these things. We have learned the code of conduct. We have done we have learned different laws to understand, to equip ourselves with the relevant knowledge and the skills. Second is the continuing professional development requirement, the CPD requirement, or what exactly we are doing right now. While we are joining a webinar or learning a new thing, a new skill, the new laws which is there in the market, which is introduced by the legislation, new regulation which is coming for the professionals, we are upgrading ourselves and learning from them to understand that what we can do and what we should not do. So if we are fully equipped with the new skills and the latest regulations, it will help us in avoiding the mistakes. And as you're aware that the excuse, there's no excuse for not knowing the law. Third is the corporate governance regulations. When we talk about the corporate governance regulations, there are certain different standards and the regulations which is in place. And as a part of the corporate governance team, we really need to understand and we have to ensure that there should not be any violation of these regulations. Fourth are the professional standards. Learning the professional standards and following them is again very important part for us to safeguard ourselves from various threats. So this code of conduct is again the part of the professional standards which we have. Fifth is the professional and the regulatory monitoring and disciplinary procedures. ICI has also laid down a detailed disciplinary procedure for us to follow in case of any misconduct. So there are certain things which is there in the code and in the Chartered Accountant Act as well, which says that yes, what we can do and what we cannot do. So the code of ethics define all the acts which we can do as a chartered accountant and which we should avoid to conduct. So there is a complete disciplinary procedure. There is one body at ICI which take care of all these misconduct issues. There is a proper procedure. Any complaint needs to be filed. CA Institute can also take a suo motu action in certain cases, wherever they came to know about it. So there's a provision for appeal of these cases as well. So the complete, as a professional, we should be aware of our rights and as well as the obligations under the CA Act and the Code of Conduct. Sixth is external review by a legally empowered third party of the report, return, communication. So at times what happens is that whatever we do, we understand that we of course take a due care to ensure that there should not be any mistake which is occurring in our review. However, to safeguard ourselves at times, we need to take an external opinion or external review. As you are aware that there are certain cases where we can refer to the expert. A proper auditing standard is there, how to use the work of an expert, where we can really refer to the expert and how to use the other people's work. So proper standards and everything is there in place. As a professional, we need to understand these things and ensure that our work, wherever required, can be externally reviewed by the third party. So conceptually, the framework says that treat the evaluation, whatever situation is there, apply the safeguards, what I just mentioned. If it is possible to reduce the threats, then accept the assignment. If it is not possible to reduce the threat, decline it. We have gained this membership of ICI with a lot of effort, and the C Institute is again taking action. Last month I saw there are few members whose name was stuck and it was going public in the market, which actually it's a discredit to our profession, but at the same time giving a strength to the existing members that yes, if somebody is doing wrong, the action has been taken. So applying of the safeguard, if you can really do a proper documentation and your approach is correct, then of course you can safeguard yourself from various threats which is there. Before I move on to the taxation services, I would like to just give a brief of the new definition, the new term, which is there in 2019 code, which was not there in the earlier codes. 2019 edition of the code, this contains the new term, public interest entity, PIE. So the PIE is basically for the enhanced independence requirements is there for in this new code. What exactly PIE really means? The public interest entities, as the name suggests, that it includes those entities where more number of people are interested, or you can say in Indian scenario, it would be a listed entity, or any entity which is defined by a regulation or legislation as public interest entity. This definition is there in the code itself, for which the audit is required by regulation or legislation to be conducted in compliance with the same independence in compliance with the same independent requirement that apply to the audit of a listed entity. Such regulation may be promulgated by any relevant regulator, including an audit regulator. So what happened is that there are certain people, so there are certain entities which is having a public interest. And for this definition, the banks and the insurance companies are included, and they are treated as public interest entities. So where the public at large is involved, then it is termed as PIE. It is not necessary that the stakeholders would only be the shareholders in those companies, in those entities. It could be those where large number of employees are also part of it. So when we say other entities might also be considered by the firm to be public interest entities, as set out in para 400.8 of the Code of Conduct. So it says that there are three factors which needs to be included in that. First is the nature of the business, such as holding of the assets in a fiduciary capacity for a large number of stakeholders. Maybe the public trust can be included, or financial institutions, or the pension funds, which are not listed but can again be the part of this PIE definition. Another factor which can be, which is to be considered, is the size of the entity. Third is the number of employees. If the number of employees are high, then the stake, of course, it will be treated as the public interest entity. Although there is no threshold, nothing is clearly defined what is like how after how many number of employees it will be a PIE. It has to be materially and has to be decided by the firm. It is to be considered by the firm. When we talk about the firm, it means the CA firm which is engaged in the assignment. Now coming to the very important part of today's session, that is taxation services to the audit clients. Previously, in the last code 2009, the taxation services includes the compliance, planning, and everything. And these assignments are generally not seen to create threats to independence. And there is no restriction. However, the new code, which is introduced and which will be applicable from 1st April 2022, it says, it gives a little detail onto the guidance, onto the taxation matters, what we really can do together and what we really cannot, while we are having the audit client, or for our audit client, basically. Of course, there's no restriction to take it for non-audit clients, but yes. So this code defines these 5 services, and we'll discuss these 5 services in detail, and we'll also see the threats and the safeguards which is available for us. So these 5 services, which is specifically mentioned in the code, first is the tax return preparation. So the tax return preparation, there's generally no threat. However, we will see when what exactly we can do and cannot. The second service is the tax calculation for the purpose of preparing accounting entries that will subsequently be audited by a firm. This actually creates a self-review threat, because once you are telling them what exactly are the accounting entries which need to be passed by the entity, then at a later stage, it will be, of course, you cannot review your own work. It will be treated as correct. So you should not be a part of those things. However, there are certain exceptions to it. There are certain points where you can take up those things, and there are certain areas where it is clearly prohibited that you should not take up such kind of assignment. Third is the tax planning and other tax advisory services. Basically, it will create, it might create a self-review or the advocacy threat, and we can overcome it using the appropriate safeguards. Fourth is tax services, including valuation. Although valuation, there's a separate subsection which deals with it. So the subsection which deals with the taxation services is 604. When we talk about the valuation services, it is 603, which deals with the valuation services for the audit clients. So we can perform these services only and only when it is not having a direct effect on the financial statements. Fifth is assistance in resolution of tax dispute. This might create, again, a self-review or the advocacy threat, and appropriate safeguards needs to be adopted. And we really cannot provide if it involves acting as advocate for the audit client or amount. The amount involves a material to the financial statement on which the firm will express an opinion. So these are the 5 services, taxation services. Let us discuss this one by one. So before discussing that, there are certain factors which is relevant in evaluating the threats. Level of threat which is created by providing any taxation services. So first of all, the factors which we need to consider and evaluate is the particular characteristic of the engagement. What kind of engagement we are getting into. We have to ensure that it should not lead to a self-review or advocacy threat. The second is the level of the tax expertise of the client's employees. The employees which the client is having, what is their level of expertise? We need to decide and then evaluate. Third factor is the system by which the tax authorities assess and administer the tax in question, and the role of the firm or the network firm in that process. So in India, we are having different level of taxation. Like while we file our return, then it goes for the processing. Then few of the cases are taken up for the scrutiny, and few cases, if not left for the scrutiny at the beginning, then they might take up it for the income escaping assessment. So different kind of assessments are there. TP assessments is again there. The process is a little different. Now we are getting into the faceless. The process is altogether different for that. In case of search cases, the process is different. So while we are taking up any assignment, we need to see what kind of case and how it is going to be assessed and administered by the income tax department. We have to take care of that, the whole process which needs to be followed. The next is the complexity of the relevant tax regime and the degree of the judgment necessary in applying it. The complexity of the relevant tax regime is again important. So there are certain companies where the tax regime and the application is a little complex. There are various provisions of income tax law which applies to them, and it is again a little different. So while we are talking about this taxation services, it includes both direct and indirect taxation. So whatever we are discussing here, it applies on both kind of laws, be it direct tax, the income tax in India, or the GST, be it excise, GST, customs. All these are again the indirect taxes. So all these things needs to be taken care, this taxation, while we are evaluating what kind of threats will be there for the level of the threats which is there if we accept any taxation assignment from the audit client. So first is the tax return preparation. The tax return preparation services, it usually does not create a threat. Why so? Because in general, the tax preparation services are basically, it is usually on a historic information, which you really cannot change. And it principally involves the analysis and the presentation of that historical information under the existing tax laws. And moreover, these tax returns are subject to the review or the approval process of the tax authorities. So while we are assisting client with their tax reporting, their obligation by drafting and compiling information for the standardized form is required to be submitted to the tax authorities. Generally, the service does not create any threat. However, advising on tax return treatment of the past transaction, which require analysis and the additional information. So that kind of thing is, again, this might create a self-review threat or the advocacy threat. Because while we are advising on the tax return treatment of the past transaction, how it is to be treated. For example, if I take up a small example from a GST, whether the ITC can be taken or cannot be availed in the return. So that again is a matter of the judgment. So this needs to be reviewed by the auditor at a later stage while we are auditing them. We'll treat those returns as if it is correct. So these tax calculation, the tax calculation for the purpose of preparing the accounting entries, the second level, where we have to tell them that, for example, if you receive a subsidy for setting up an industry, so there are multiple legislation which applies to them. There are multiple benefit in GST, they got some subsidy. In income tax also, they got some subsidy. Whether these subsidies, the basis of the subsidy or the scheme which is floated by the government. So whether it should be treated as capital, whether it should be taxable or not taxable, what's the treatment and all. This again create a self-review threat at a later stage, because it is your opinion based on, of course, the underlying law and the legislation and the relevant practice. However, there are certain cases where you cannot really say that this is what is supposed to be done. So there are some clear-cut cases where, yes, if we take up any item and the treatment of the same is same for all. However, there are certain cases where two opinions are possible. And we advocate the audit client to adopt one of the situation where two opinions are possible, then we ask them to adopt one. Then this will create a self-review threat, because at a later stage, while we'll audit those entries or the calculations, it will lead, and of course, it again, apart from this creating the self-review threat, it will also create the advocacy threat. if the opinion goes wrong, because at times we handle the cases based on different legislation, different case laws, which is pronounced by various high courts or the tribunals. And then we form an opinion. Of course, when there is a dispute, either there are certain judgment which is in favor, there are certain judgment which is against the client. So what exactly you're following, again, there are a lot of intricacies into these kind of judgments, which needs to be taken care and get into the depth. So there are these factors while evaluating the level of the threats, in addition to the 4 factors which we have already discussed, which applies on all the cases while evaluation of the threat. The additional factor is, while preparing the calculation, might not have a material effect on the financial statement on which you're going to express an opinion. So if there is no material impact, then of course we are reducing or trying to safeguard ourselves. But in case if it has a material impact, then in case of PIE, it has to be declined. Such kind of assignments should not be taken up. So audit clients that are not public interest entities, as in what I have already mentioned about the public interest entities. So if those clients are not public interest entities, then you can use your the safeguards which you can take to address such self-review threats when your client is not a public interest entity, which includes using professionals who are not audit team members to perform the service. So in big CA firms or in a larger setup, it is possible to have 2 different set of teams. One is who is taking care of the audit assignments. Another one is the one which take care of the taxation services. It is from a mediocre to a large firm, it is possible. However, in a smaller setup where the teams are limited and the experts are less in the team, like within the firm, so it's better to decline the assignment rather than accepting it. So if there is a self-review threat, how we can really safeguard ourselves is to engage another team for doing the taxation work. One team is taking care of the audit, another one is doing the taxation work. Then within the team, within the firm itself as such, the chances of having any self-review threat will be a little less, because it's not the same set of people who are checking the work. Next is having an appropriate reviewer who was not involved in providing service review of the audit work or service performed. Alternatively, we can have a outsider or appropriate reviewer who was not at all involved in the whole assignment. So these are the 2 safeguards which a CA firm can take to avoid any self-review threat. So, however, in case of a public interest entity, the tax calculations, it needs not to be prepared by the CA who is doing the audit if it has a material impact on the financial statement. So taking out the materiality and judging that is again a question of it's a question of their judgment and what is material and what is not. There is no set formula for this. Of course, there are certain formulas which derives the materiality level. However, there's no thumb rule to it. So in case of a public interest entity, if the impact is material to the financial statement, then the firm shall not prepare the tax calculation. So it is under the prohibition. Clear-cut prohibition is there in the code of conduct. However, in case if it is immaterial to the financial statements, then it can be done by the CA firm. However, they have to follow the same safeguards which is there, which we just discussed for non-PIEs. These two, right? That we can have, we can do it using the professional within the firms who are not audit team members or having an appropriate reviewer. These two are the safeguards which we have to take in case of PIE, only if the impact of the calculation is not material to the financial statements. Otherwise, if it is material, it is clearly prohibited to take up such assignments. Moving on to the next service, tax planning and other tax advisory. First, while we are doing tax planning or the tax advisory services to our audit clients, it might create a self-review or the advocacy threat. So factors that needs to be evaluated for the audit client for offering this tax planning and the advisory services would be the degree of the subjectivity which is involved in determining the appropriate treatment of the tax advice in the statements. As I just mentioned that, so there are legislation where legislation is very clear, then there is no problem. However, if there is, it's a debatable issue, which involves a lot of subjectivity, where we get into facts and understand that there's some regulations which is in favor, there's some case laws which is against the SSE, and we are doing, the degree of the subjectivity is high. Then again, we have to evaluate if it will not create a self-review or the advocacy threat, then we can accept. Otherwise, we should decline the assignment. The next factor which we need to take is whether the tax treatment is supported by a private ruling or has been otherwise cleared by the tax authority before the preparation of the financial statements. So the private ruling can be, of course, till IT-80 or maybe the level below that, where the treatments are different. And however, if the jurisdictional issues are there and there are certain things which is in favor, if it's a Supreme Court judgment, then that ruling will apply without any issue. So the tax treatment, if it is supported by a private ruling, or then we have to understand the implication of our judgment which we are going to have while giving them any advisory services. Third factor which we need to take care is the extent to which the outcome of the tax advice will have a material effect on the financial statement. So if the amount involved is material, the impact is material on the financial statement, then the tax advice, it will create a self-review or the advocacy threat. So anything which is material to the financial statements should not be, we should avoid advising on those aspects. So when we talk about this, it applies to all audit clients, be it PIE or otherwise. The material in tax planning aspect, there is no bifurcation between the public interest entities or otherwise, or the non-public interest entities. both are treated at par. If the amount is material, then we should, so it clearly says there is an advocacy threat. We have to evaluate that factor while taking up the assignment. The next factor which is important is whether the effectiveness of the tax advice depends on the accounting treatment or presentation in the financial statement. And there is doubt as to the appropriateness of the accounting treatment or presentation under the relevant financial reporting framework. So the tax advice is having an impact based on the accounting treatment also, and the presentation in the financial statements. So if that also has an impact, for example, if I give a small example of this is, although it is mandatory in income tax that the indirect taxes, earlier it was VAT and now VAT and service tax separately, now it is GST. It should be routed through P&L. For big companies, it is there. However, for small, rather non-corporate entities, since not much laws are applicable on them, so what they do is they keep the indirect taxes out of their P&L. However, we conduct tax audit in such cases, and it's a requirement in tax audit report to mention the impact of the ITC availed and the taxes paid on this. So if there is an impact because of this treatment on the allowability of GST as an expense, or if we keep it out of P&L. So these kind of treatments, if we are advising our client on this, then of course, not just this, but beyond this, if we may do such kind of plannings, then this factor should also be considered, whether it has any self-review or advocacy threat to the audit assignments which we are conducting. So there are certain safeguards which is again provided in the code itself. So there are certain examples of the actions that can be taken as the safeguard, which includes, of course, using professionals who are not the part of the audit team, because it will help to address the self-review and the advocacy threat, because it will be, of course, they are part of the firm, but they're working very much independently. So having an appropriate reviewer who is not involved in providing the services, review the audit work or services performed might address a self-review threat. So having an independent reviewer will also help us in safeguarding ourselves from these threats. Third could be obtaining a pre-clearance from the tax authorities might address this. So while we are giving any opinion, there are certain provisions where we can take a opinion, or we can take a clearance from the tax authorities. So such kind of things will help us in subsiding or in safeguarding ourselves to address these threats. So when effectiveness of a tax advice is depending on a particular accounting treatment or presentation, in that case, the firm shall not provide these services, where it shall not provide any tax planning or the tax advisory services to the audit client, where the effectiveness of the tax advice depends on a particular accounting treatment, and the audit team has a reasonable doubt as to the appropriateness of the related accounting treatment or presentation. So why we say that they are having a doubt on it, whether it is correct or not, or what should be the right treatment, then the firm should not take up that assignment. The outcome and the outcome of the consequence have a material impact on which on the financial statement on which the firm will express an opinion. So if it is having a material impact on the financial statement, then the tax planning and tax advisory services is also prohibited. So there are two different factors which needs to be taken care together. One is the audit team is having a reasonable doubt. And second one is that the consequence of the advice is material. So these two factors should meet together to find out whether the assignment can be taken up or not. The next tax services which we are going to talk about it when it involves valuation. There are certain instances where valuation is required for the clients at various levels. For example, for immobile properties, for shares, for various capital assets, if it is transferring at a lesser value. So these kind of, there's certain transaction which involves valuation. So as a audit, as a firm, when I'm having an audit client, if I'm also providing a valuation service, that will also create a self-review and the advocacy threat. How it will create? Because if there is a material impact of the valuation of for tax purposes, which has an impact on the material impact on the financial statement, then of course it will be an advocacy threat. I'll be a little biased towards a client for offering that services. So of course, the firm might perform on these valuation for tax purposes only, but at the same time, we have to ensure that the result of the valuation should not have a direct effect on the financial statements. So that is, the financial statements are only affected through accounting entries related to tax. So that has to be very, very clear that it should not have any direct effect. And this would not cause, usually create threat if effect on the financial impact is immaterial or the valuation is subject to the external review by tax authorities or a similar regulatory authority. So if the valuation is immaterial, does not have an impact on financial statement, then of course the threat is reduced. However, if the valuation is performed for tax purposes, which is not subject to the external review, external review is not there, and the effect is material on the financial statement. So then, in addition to the previous factors which we have discussed, the 4 factors, the following factors should also be evaluated to ensure to check the level of self-review and the advocacy threat, which is created if we opt to take up the assignment for the audit client for the valuation. So the 3 things which is important to evaluate is the extent of the valuation methodology, is the extent to which the valuation methodology is supported by tax law or regulation, other precedent or established practice. Second is the degree of the subjectivity inherent to valuation. Third is the reliability and the extent of the underlying data. So when we talk about these three things, for example, if it involves a lot of judgment and the exercise of judgment in valuation, then, and it has a material impact, then the level of the threat will increase. It might create a self-review or the advocacy threat. So there are certain safeguards which is there to address these threats, which will include, so these are the examples. Of course, the valuation should not be done by the same team who is doing the audit. Of course, the members are different. The valuation team is different and the audit team is different. Then it will help us in reducing the self-review or the advocacy threat. Second is having an appropriate reviewer who was not involved in providing the services review. Of course, an independent reviewer is doing the work, then the self-review threat will be addressed. It might help in address. Or third could be obtaining a pre-clearance from the tax authorities. If we take a pre-clearance on the valuation, then it will address the threat which we might have. The last service in the list is assistance in the resolution of the tax dispute. So providing assistance in resolution of the tax dispute, it might again create a self-review or the advocacy threat. Again, we have to check the materiality level. If it has a material impact on the financial statement, or it might reach to a point when that has been notified. The tax dispute might reach a point when the tax authorities have notified a client that the arguments on a particular issue have been rejected, or either the tax authority or the client refers the matter for determination in a formal proceedings, for example, before a court. So in those cases, the threat may be higher. So factors which we really need to evaluate to check whether we can take up these assignments or not. So we need to consider, in addition to the previous 4 factors which we have discussed, which is common for all, we need to evaluate these 5 more factors. First is the role management plays in resolution of the dispute, whether the disputes, how much is management involvement in it. Second is extent to which the outcome of the dispute will have a material effect on the financial statements on which the firm will express an opinion. Again, we need to check the materiality level of these disputes. Third is the advice, whether the advice that was provided is the subject to of the tax dispute or not. So previously, we also need to check if we have given an opinion or give them advice on the tax matter, which was later on disputed by the authorities. If it is the same issue, then of course that self-review and the advocacy threat will definitely going to increase, because it was the same matter on which the firm has given an opinion, maybe through a different team, but yes. So that is again a very important factor. Fourth is the extent to which the matter is supported by the tax laws or the regulation or the precedent or the established practice. So at times it is tough to prove the established practice, but yes, regulations and if we have the precedent in the cases, then it's much easier to settle the disputes. We also need to see if there's a precedent, then the self-review or the advocacy threat would have been. Allow me a minute. I'll just connect my system to Parkable. Yes. Yeah. So we were discussing on the factors for which we need to consider for evaluating the level of the self-review or the advocacy threat. The last one is whether the proceedings are conducted in public or not. So in the initial stages, the disputes which is there, the proceedings are generally conducted in private, as in it's more or less one-on-one. Maybe at the assessment or the first level of appeal is generally one-on-one. And then later on, it goes to the public. So the proceedings are conducted at a public level at a later stage. So that is again important to take up, to consider and evaluate the level of the threat which we might have. So there are certain safeguards which is there in the code of conduct. So there are certain examples that actions which we can do is, of course, to have the professionals which are not part of the audit team. If the different team is performing the tax dispute part and different team is having the audit assignment, then the self-review and the advocacy threat can be overcome. It might address these threats. And the second is having the appropriate reviewer who is not involved in providing the service review can also help us in addressing the self-review threat, because it will be an independent opinion or independent judgment on that part. So while we talk about different services and the threats, except for one or two where the impact is material and our involvement is a little, the involvement of the judgment is high. Otherwise, it's not typically a prohibition, but yes, we need to prove, and the documentation plays a very important role in addressing these threats and safeguarding ourselves from conducting any misconduct. Resolution of the tax matter involving acting as an advocate. So a firm, it's clearly prohibited. It shall not provide the tax service that involve assisting in resolution of tax dispute. If the service involve acting as an advocate for the audit client before the court, and the amount involved are material. Because if the amount involved is material, then it will again lead to the self-review and the advocacy threat. However, it will not preclude a firm or the network firm from having a continuing advisory role in relation to the matter that is being heard before a court. For example, responding to a specific request for information. So at times it happens that particularly certain information is asked from the auditor and they're required to respond to it. Then it is that is something which a firm can do for their audit clients. Providing factual accounts or testimony about the work performed, or assisting the client in analyzing the tax issues related to the matter. So basically, when we talk about the resolution of the tax matters, which involves acting as an advocate, of course, it's a clear-cut case of the advocacy threat, where we are representing the client before court for the resolution of the dispute and the material amount is involved. Then it is prohibited to take up such kind of matters. So as a CA, we cannot represent our client before any court for resolution of the matter in where we are doing audit as well. It is even for those where the team is again different. To the extent we are not representing the client to the court, we can do so subject to certain conditions, which we have already discussed. However, otherwise it is not advisable, and it is clearly written, it shall not provide any tax service. The firm shall not. Earlier, when we look at the Code of Conduct in 2009, most of the time the word which was used at various places is should not. Now it is termed as shall not, which clearly implies that it's a clear-cut prohibition. No judgment of exercise is required in this case. So now coming to the next topic, limit on the tax audit assignments. So as you are aware that tax audit assignments are limited to 60 for every member who is in practice. And these, so earlier it was 45, from 2014, it is now 60. So there are 3 different cases where usually the question arises whether it will be treated as one or a multiple. So in case of a joint audit, if 2 or more firms are conducting the joint audit for a single client, then the limit of each one will be taken as one assignment separately. So for example, there are 3 firms and they're offering this, the audit service, the tax audit service to one client. Maybe say, let's take an example where of a bank where they have at least 4, 5, 6 auditors for auditing their accounts as well as their tax audit. So each and every firm shall count the limit of 1 for the same bank. Next is in case of a head office and branches, if assignment is given for a head office along with the branches for the tax audit, then it will be taken as single assignment. Even if they are having n number of branches, doesn't matter. It will be taken as just one assignment. Second case is if we are given not the head office audit, only the branches, then all the branches taken together will be counted as one. So in case of a CA firm, clear clarification has been given that in case of a firm, accountants in practice, a specified number of tax audit assignment means 60 tax audit assignments, as in 60 per partner of the firm. 60 will be, so say if there are 10 partners in a firm, the whole firm can collectively sign 600 tax audit reports. So a maximum of 600 tax audit assignments can be distributed among the partners in whatsoever manner. For example, if one partner is signing all 600 reports, they can. However, rest 9 will not sign a single report. In this case, this is to be understood that SQC 1 must be followed, standard on the quality control. And these standards should be followed apart from the standards of auditing to handle all the tax audit assignments if it is done by a single partner. Even if, so the limit will be counted for the whole firm based on the number of partners, and it can be divided in any ratio. If the number, if a partner is handling more tax audit assignments, they can. If somebody else is signing a little less, then it's okay. And so there's a ceiling on the overall firm. However, in case if they're auditing it as individually, then it will apply to each partner. So now it's time for question and answers. Please feel free to ask.
If there are any queries of the members, we can, if there are any queries in the chat box, Rashmi ma'am, Jay, if we have received any queries of the members in the chat box. It was an excellent, well elaborated session. I feel that the valuations part was most interesting. That is where the things really go on that in the last part of the tax audit.
Yes. Actually, in tax audit, it happens that so in a mediocre to a large firm, the partners there are different partners who take care of the tax audit and all other assignments. So it's always it always happens that they do not get that limit. So one partner who is doing the tax audit and taking care of it will sign, because again, the work of one should not be signed by the other if it is not properly reviewed.
But I'm just getting the questions asked by the participants. Just give me a moment.
Sure, sir.
So, ma'am, till that time, if there are any more relevant points which you wish that members should really take care of, you can just put those questions. Till that time, I'm just sending you the questions.
Yeah, I got a few questions from the members.
Yes.
First is, what is the prohibition for giving taxation services to audit clients? I think I have, when I elaborated presentation on this, of course, the prohibition that we have discussed, it will apply from 1st April 2022. In case of specifically two services where it involves material, the amount is material and the public entities are involved, PIEs. If these two factors are there, then it is prohibited. Other than that, we need to review if the threats are high and we are not able to safeguard ourselves, then we should avoid taking up those services. The tax planning services, the prohibition is there on the tax planning services, and second is on the tax services that involve assisting in resolution of the tax disputes and the tax calculation of the current and the deferred tax assets for the audit clients, that is the public interest entity. Typically, these three are clearly prohibited. Rest others, it is the judgment of the firm, then it should not be taken up.
We have got another query, whether a partner of CA firm can sign tax audit report on behalf of another partner of a firm, whether it will impact on the limit of tax audit assignment permissible by the ICAI.
I just answered that question during the last slide. And so ultimately, I just mentioned that a partner who conducted the tax audit should not effectively sign until unless it is reviewed by the signing partner. So if there are two partners, one is conducting the audit, second one is just signing it, effectively they should not do so. There's a clear standard of auditing on this part, that the assignment should be taken up by the same partner. It should be signed by the same partner. And there is a clarification by ICAI on this account that the whole limit of the firm will be taken care instead of individual partner in case if the limit will apply on the firm, not on the individual partner. So you can take up, you can sign more than 60 if the other partner is not exhausting their limit. I got another question. Whether the transfer pricing attestation services can be undertaken by the internal auditor of the same entity. So to answer this, the transfer pricing is only a certification work. It is not an audit and the assignment of the certification. It may not be linked with the issue of certificates. So the transfer pricing, it may be taken up by the auditor of that entity. That's not a problem. If it is only the attestation function, not an audit function.
Right. Another question is am I audible?
Yes, sir.
Yeah. The next question is about whether a chartered accountant who is appointed as tax auditor for conducting special audit under the Income Tax Act by the IT authorities, is it required to communicate with statutory auditor?
Yes, the council direction mentioned under clause 8 of the part 1 of the first schedule of the Chartered Accountant Act, appearing in volume 2 of the Code of Ethics, prescribes that it would be a healthy practice if a tax auditor appointed for conducting the special audit communicate with the members who has conducted the statutory or the tax audit.
Okay. And the last question for today is that a private limited company offers appointment to act as tax auditors of the company under the Income Tax Act to a CA firm partnership in which son of mother's sister.
So this is not covered under explanation to section 288 of the income tax, which describe the disqualification for accepting the tax audit by a CA in practice. So since it is not covered under that, however, you can always evaluate the independence, and if it impairs your independence, you should avoid it.
Well, I feel all the queries have been answered effectively. Are there any more queries?
No, sir, we can move on, sir.
Ashwin, madam.
Move on to next session.
Great. Thank you so much, Sana ma'am. It has been really a very, very nice and informative session from you. Thank you so much for being so kind and elaborating on all the provisions so nicely. We have got our second speaker for today, CA Asim Trivedi ji. I would request the treasurer of the Nagpur branch, CA Akshay Gulhane, to kindly introduce CA Asim Trivedi ji to the audience.
Thank you so much, Chairman sir. CA Asim Trivedi sir is nationally recognized as an author, trainer, motivator, and consultant for auditing standards, accounting standards, IFRS, Ind AS, company law, economic law, commercial law, and security law. As such, he is a lecturer all over India. He writes and publishes the books for chartered accountants and company secretaries. He is publishing the knowledge series for chartered accountants on contemporary issues of the profession. He had given more than 250 seminars at ICAF platform on various subjects. He has given lecture solution to resource persons of various leading corporate houses. He has been a special invitee to ASB in 2011-12. He has been a member of study group of Ethical Standard Board a couple of times. So we welcome you, sir, on the forum of Nagpur branch, and handing over to you for the session, sir. Thank you so much. Over to you, Asim, sir. Asim, sir.
Am I audible?
Yes, sir, you are audible.
And video is also there.
you are visible also.
Okay. Hello. Hello.
You are audible, sir. You are audible.
Yeah, I'm not visible to myself. Yeah, thank you. Good evening. I have been assigned to talk with you regarding the NOCLAR clause, which is making buzz in whole country. And so many representations have been given on this particular topic to ICI. ICI had deferred this particular provision also. But important is when you go with this particular kind of NOCLAR provision, you might find that this is not that much significant, which it was made by the WhatsApp universities, various groups, and probably the timing of this particular NOCLAR provision to be announced was pre-election era. So in that case, whatever be coming new, it is bound to be resisted by the incoming candidates, and the outgoing candidates or the existing candidates have to defend it. This is a natural phenomena in any of the institutions like us, where the elected body is taking over. So this particular chaos has been created for NOCLAR by the practicing chartered accountants of listed entities, because NOCLAR was going to be applicable over the listed entities itself. NOCLAR is called non-compliance with laws and regulations. To my surprise, when I went through the whole provisions relating to NOCLAR, what I found that the impact of such NOCLAR is not that much hampering the audit, because all the provisions which are given in NOCLAR itself under clause 360, whatever they have given, they all are already there under standards on auditing 250, consideration of laws and regulation in an audit of financials. If I want to, if I go to that particular ICAI's volume 2, I'm just connecting with you that particular volume 2, and I'm going to read the whole NOCLAR provision before you, and then you please decide that exactly what difference it makes when we are talking about NOCLAR and whatever given under the standards on auditing 250. So when we go to volume number 1 of the Code of Ethics, in this particular volume number 1, in 300, they have given 360, they have given NOCLAR. So I'm coming to 360 and I'm sharing the screen with you relating to NOCLAR. Now, sharing the screen. This is there. Fine. So, is it visible to everyone? Screen is visible.
Yes, sir, it is visible.
Visible,
Yeah.
sir.
Thank you. Thank you. See what it says. Just a minute. It's more bigger. I'm keeping myself aside. Yeah. This is section 316. It talks about responding to non-compliance with laws and regulation during the course of the audit. Engagement of listed entities. So surely it is related to listed entities, and the applicability was there. So okay. The requirements, you all know that the requirements are given in our paragraph, like this R360.6. This is called requirement. So what exactly the non-compliance is? Non-compliance hai kya? So the same definition which is given under SA 250, the same definition is here. Non-compliance with laws and regulation comprises of act or omission or commission, intentional or unintentional, which are contrary to prevailing laws or regulation committed by following parties. So they have categorically mentioned that a non-compliance with laws and regulation comprises the act of omission or commission, either intentional or unintentional. So if you misinterpreted a law, that would be called as commission. And if you are omitted to comply with the law, that's called omission. So your omission or commission, whether it is intentional or unintentional, which is contrary to prevailing laws, it would be treated as non-compliance. Such non-compliance can be made by client or clients those charged with governance or clients management or other individuals working for or under the direction of the clients. They may be experts, they may be in-house persons, CEO, CFOs. So all non-compliance. Fine. Then they have explained it, that what are the examples of laws and regulations which this section addresses, include those that deals with fraud, corruption, bribery, money laundering, terrorist funding, proceeds of crime, security market and trading, banking and other financial product and services, data protection, tax and pension liabilities and payments, environmental protection, public health and safety. They have explained all this. Now, I'm just analyzing the thing, why that chaos has been created nationwide. I just failed to understand. Now tell me, SA 240 always talks about this fraud, corruption and bribery. If there is any fraud is going to be happened, like Satyam, there was a fraud. So that fraud was of insider trading, that fraud was of company law violation, that fraud was of money laundering. So if you go to any fraud, be it is Nirav Modi case, be it is Satyam, whatever, they all are infringing the same laws. It is a fraud, it may be a corruption, it may be bribery, it bound to be money laundering. I'm not saying terrorist funding and proceeds of crime, but yes, these are there. Then insider trading and all such offenses are coming under the security markets and trading. If a listed entity is there, listed entities shares are there, listing agreement is there, LODR is there. Now tell me, if this particular NOCLAR provision, suppose, have not been enforced in India, can we think of an audit where we are not responsible for detecting a fraud or corruption or bribery, or can we overlook any money laundering activity or terrorist financing or proceeds of crime? Can we overlook any violation of security market or trading? Can we overlook in a bank the IRAC norms? Can we overlook in a financial corporation the norms of financial corporation which are set by the central government or state government for that behalf? in a company where the data is being processed and in a company which contains the client's data and confidentiality, are we not concerned with the data protection if this NOCLAR is not there? Are we not taking care of tax and pension liabilities and payment if this NOCLAR is not there? Are we not able to find out the environmental protection, public health and safety? Now the people were concentrating on these two laws. Now we have to check environmental protection and public health and safety. So should I have all the laws relating to Factories Act and Industrial Act and Industrial Dispute Act, workmen compensation? There are so many things, and our scope had been broadened, and so on, so forth. Just a minute. Now just concentrate on standards on auditing 250, which is applicable in India since last 10 years or so, applicable to every company, including private limited company, including small company, including OPC, even to a partnership for audit. What was the objective? Have we ever thought that what is the objective of SA 250? It clearly mentions that it is auditor's duty to obtain sufficient and appropriate audit evidence that there is no non-compliance relating to those laws and regulations which are responsible in determining the figures of the financial state. There are so many laws and regulations which are required to be complied. And if there is a non-compliance, they are bound to be effect on figures in financial statement. If you are not complying properly with GST law, definitely GST payable and IT input tax credit receivable figures cannot be accurate. If you are not complying with Income Tax Act 1961, your provision for tax, deferred tax assets, deferred tax liability, current tax, MAT provisions will not going to be appropriate. If you are not complying with Companies Act, surely under section 143, they are going to ask about the non-compliance. Now tell me, which law is not covered by SA 250? Some articles I read in various so-called sites. Some authors were writing, auditor will now be responsible for environmental protection, public health and safety. Sir, I have just given you the first part of the objective of standard on auditing 250, and I did not read the second paragraph. What is the second paragraph of objective given under standard on auditing 250? It clearly mentions, boss, pehla to hua, auditor should have sufficient and appropriate audit, should obtain sufficient and appropriate audit evidence that those laws and regulations which are there, those laws and regulations which are there, which determines the amount contained in the financial statement and which affects the financial statement amount significantly, auditor has to obtain sufficient and appropriate audit evidence regarding them. Then the second part of the objective says, auditor should also ensure that there is no incidence of non-compliance relating to other law. So the first part of standard auditing 250 clearly mentions that auditor, you should design and perform the audit procedure for those laws and regulations which are affecting the financial statement. It means you need to specifically design audit procedures in your audit program to comply with SE 250. You need to design a specific procedure and apply specific procedure so that you can obtain sufficient and appropriate auditors that those laws and regulations have been complied with, which are determining the figures of the financial statement. So I have done that. Now the second part says, and auditor should assure himself that there is no non-compliance with other laws and regulation, means other laws other than those which are determining the figures in the financial statement. So sir, that other law includes everything. That other law includes Environmental Protection Acts. Those other law includes the industrial laws. Those other laws including the public health and safety. Those all laws are there. How one can say that NOCLAR had came all the way now and we already responsible for such things, sir. And then that a standard on auditing explains it. Now tell me, I'm just putting some examples before you just to understand the gravity of the subject NOCLAR. NOCLAR is not new, but NOCLAR is there. What happens is, in case of a company, a scrutiny has been done. And that GST officer has raised a demand that you are a betel nut प्रोड्यूसिंग कंपनी, मीठी सुपारी टाइप की चीजें बनाते हो, पान मसाला कैटेगरी में आता है, you have to have, and you are processing it, so you have to have 18% GST. And what that company did is they have collected and paid 12% GST. Auditor is signing all the way from last 3 years on that particular 12%. Even auditor did not apply a single procedure to check out the classification of the goods. Now tell me, NOCLAR का तो कोई मीनिंग ही नहीं, ये तो ऐसे 250 कवर कर गया. GST Act is an act which determines the figures given in financial statement. Now the auditor will be issued a notice soon because they have complained it to ICI also. Now the DD will issue soon a complaint, issue cause notice to the auditor. On what basis you have checked the sales and sales invoices? Altogether 12% GST has been collected in paid. So what is the basis of that? This is something very strange that a chartered accountant is just omitted to just interpret it that what kind of rate is applicable to it. In that very similar case, that notice contains another point that we are disallowing the input tax credit because the payment has not been done within 180 days. Now the second finger will point it out towards the auditor that what did you not correlate that they have paid it or not? And if they have not paid it within 180 days, it could have been reversed. This should have been reversed. Why you are waiting for us to scrutinize? Is it not within your purview of the audit to check out whether the compliance with the input tax credit is there or not? Yes, it is there. Clients sitting outside in my office also. But none of them will be allowed to sit there if they are companies or they are having a turnover related to exceeding limit, because for that you need to come 2 months before the last date of the return. If today some private limited company will come and ask me to sign financial statement as Nirmala ji is not extending the date, or if some partnership concern is coming to me and saying that Nirmala ji is not extending the date, kindly sign this financial statement. And if today that particular balance sheet came to me, these things are bound to happen. How can you check within those 8 to 10 or 12 hours for audit that whether these laws and regulations have been complied with or not? So this is what we are talking about. Environmental protection, public health safety. What about these kind of acts? Do we go and check them out? No, sir. Standard on Auditing 250 clearly mentions that for other laws and regulations, just get a written representation from management. Just get written representations from the management that to the best of their knowledge and belief, there is no non-compliance with other laws and regulations. This is the first audit evidence which we need to have in our working note, which we need to have in our audit file. Second, auditor may discuss the same written representation with client's legal advisor or legal counsel and get a representation from him also that in his knowledge also there is no non-compliance arose during the year relating to any other. Third, there is internal auditor also. You can also get a representation from internal auditor that during his audit, he did not observe any non-compliance relating to laws and other laws and regulations which are not affecting the, which the figures are not determined on the basis of them in financial statement. Fourth, ask for departmental file or departmental communication. Get a declaration from management. No show cause notice have been issued to us during the year from any other department other than those who are the no demand notice or penalty notice have been received by the company during the year. And if they were there, we have disclosed the same to the auditor. Why do not we have such written representations with us? According to SC 250, they clearly mentions that you need to have written representation. According to 580, we can have written representations. A format is also given for the written representations. Where they have said that you need to apply, design and apply specific audit procedures towards this environmental protection and public health and safety, tell me. And what requirement is saying, I am now reading out. When encountering any such non-compliance or suspected non-compliance, the accountant shall obtain understanding of legal and regulatory provision governing such non-compliance. So if I am auditing a bank branch and I suddenly found out that income recognition, asset classification, IRAC norms are not religiously followed, some of the accounts have been declared as a performing asset, but I have scrutinized them and got that no, they are not at all what performing asset, they are non-performing asset, then sir, in my terms of engagement under bank audit, it had been mentioned very clearly that I need to issue an MOC, and in that memorandum of changes, I should include all these things. So I should include all these things in the memorandum of changes. It is requirement of the law. If I come to company audit, under Companies Act, it has been clearly mentioned that if there is any fraud, which is also covered under the non-compliance, if there is any fraud relating to employees committed with the company, and if that amount is more than equal to 1 crore rupees, you need to communicate within 2 days to Board of Directors or Audit Committee, and within next 45 days get the explanation for that particular fraud from there, and then within next 15 days you have to communicate it to Ministry of Corporate Affairs. So if such kind of requirements are given under the Act itself, how one can say that NOCLAR is coming and it is going to change the whole auditing and all that? I don't think so. In Standard Auditing 250, if this chaos is required to be created, it could have been created when SA 250 had been introduced in our standards of auditing. Why right now we are, see, the compliances. Accountant shall obtain understanding of legal or regulatory provisions governing such non-compliance or suspected non-compliance and comply with them. You have to comply with them, including any requirement to report the matter to an appropriate authority and any prohibition or on alerting the client. If any laws and regulation clearly mentions that you have to straightforward intimate to the tax authorities, you have to straightforward intimate to the VAT authorities, you have to straightforward intimate to regulatory authority without communicating with the client. Right now, we don't have such kind of a law except money launderings. In money launderings, if we have any knowledge about the things, we need to communicate. So that is important. So important is anti-money laundering legislation will cover such non-communication to the client, which we have to take care of. And if this NOCLAR provision was not there, then also I will apply the same method. There is nothing problematic. Now, who is responsible to oversee the laws and regulations have been complied with or not? Everyone knows that management with the oversight of those shared with governance is responsible to apply a system which should take care of compliance with laws and regulations. So it is very, very clear. Client may have any system. They may apply internal auditor. They may appoint internal auditor for that. They may have their legal department take care of all these things. Now, what is professional accountant's responsibility? Let us understand again. Where a professional accountant become aware of a matter to which this section applies, the steps that accountant takes to comply with this section shall be taken on timely basis. Yes, sir. It should be timely basis. If you have obtained any vital information and that vital information which is with you should be immediately communicated, you cannot wait till your report is being dispatched. You can't. You can't say that whatever the non-compliance is, I am going to report in my report only. No, sir. If such non-compliance is of such kind where I need to take immediate step, I need to take immediate step. Timely steps has to be taken regarding the nature and potential of the item. Just for an example, I was auditing a pharmaceutical company. This is a real life case I'm talking about. I was understanding the updation in the knowledge of the client's business. So I was updating my knowledge. And I said, you are a pharmaceutical company. You had all these licenses previously, and you were manufacturing these new drugs. Now, kindly let me know, do you have any more drugs which have been added to the list of drugs manufacturing? Because due to this corona crisis, you might have started some new drugs to be manufactured. They gave me list of some of the drugs which they have added in their portfolio. And just I found that one of the drugs is an antibiotic, and which was falling in some of the schedule H or some kind of schedule. And when I read out that particular drug and Cosmetic Acts of India and permission regarding that, I found that there is no permission to the company for manufacturing all these things. And had it been communicated to the drug inspectors and drug authorities, there could have been a serious issue on going concern of the entity. They will lock it out and all that. So I immediately wrote a letter to management and those charged with governance that please stop immediately any operations relating to this, because you do not have permission from the drug authority. Either you give me the drug authority license for manufacturing this drug, otherwise it would be an illegal activity. I'm going to point out in the report itself. So they also stunned. They even not bother about what they are manufacturing. They got a formula from somewhere. They got contents from somewhere, and they started manufacturing all these things because it was COVID times. Fortunately, they have not produced those drugs into material quantity. So there was hardly negligible turnover with those, but stock was there. And I then said that you have to destroy this stock or do whatever formality you want to do with the drug authorities. So this is a serious concern. If you go to audit for anyone, and we are saying that balance sheet is giving true and fair view, balance sheet is giving true and fair view, and we see after 10, 12 days, there will be cease of the company because of these all irregular activities. So what it says as that the matter to which the section applies, the steps that accountant takes to comply with this section shall be taken on a timely basis. In taking timely steps, the accountant shall have regard the nature of the matter and potential to the interest of the entity and its investors. So in such case, the things will be there. Now comes the obtaining of the understanding of the matter. If a professional accountant engaged to perform the audit of financial statement, aware of the information concerning non-compliance or suspected non-compliance, the accountant shall obtain understanding of the matter. This understanding shall include the nature of non-compliance or suspected non-compliance and the circumstances in which it might be occurred. So I have explained you that in the COVID circumstances, when there was a selling pressure, they started manufacturing this, but they have manufactured very insignificantly. And some of the stocks was there which they have destroyed with the instructions of the drug authorities. Fine. The professional accountant might become aware of non-compliance, suspected non-compliance in course of performing the engagement or through information provided by other parties. You can get from anywhere. These are all application materials, so I'm not going with that. I'm just going with the requirements. Wherever this R is written, this R is required. If the professional accountant identifies or suspects that non-compliance has occurred or might occur, accountant shall discuss the matter with the appropriate level of management and where those shall be governance. I immediately went to management and those shall be governance and shown them that this is a serious non-compliance going on your behalf. it can affect directly your going concern of the. They'll cancel all your manufacturing license because this particular scheduled drug you are not allowed to manufacture it. You are started manufacturing it, even marketing it. You have marketing rights for that. You don't have manufacturing rights for that. So this is a serious issue with the pharma company. The purpose of discussion and all this again explanation is given. Again requirement comes. If the professional accountant believes that management is involved in non-compliance or suspected non-compliance, the accountant shall discuss the matter with those charged with governance. Go to one more level ahead. Go to those charged with governance. Go to independent directors. Go to audit committee. Report them that this kind of non-compliance is done by the board of directors. In discussing the non-compliance or suspected non-compliance with management and where appropriate with those charged with governance, the professional accountant shall advise them to take appropriate timely action if they have not already done so. What I suggested them. First, you stop production. Second, you have to destroy the stock as per instruction of the authorities. You have to communicate to the drug authorities that by mistake or whatever it is, you have done this, but they said we have not significantly destroyed it. Rectify, remediate, or mitigate the consequences. Deter the commission of non-compliance where it has not yet occurred. Disclose the matter to appropriate authority where it is required. I have wrote a letter to audit committee. I have wrote a letter to CMD. Where possible, I have reported that this came to my knowledge and why it did not come to internal auditor's knowledge. And one thing to be very sure, this should not be repeated. For that, internal control is required there, that unless and until your legal department is not giving you a green signal, you need not to add any product into your product basket. That an internal control which is required to be added in their system. Professional, now next requirement, the professional accountant shall consider whether the management and those charged with governance understand the legal and regulatory responsibility with respect to non-compliance or suspected non-compliance. I made them clear that this may be a clear-cut prosecution. We need to give them a clear vision. We need to make them clear that this is the seriousness of this non-compliance and you can be prosecuted in this particular case. So all such things we need to take care of. And now tell me, was it not required under standard auditing 250 to communicate like this? It was already made it clear in standard auditing 250. What else NAFRA, what else this NOCLAR is being treated? Requirement 360.15. Professional accountant shall comply with applicable laws and regulation, including legal or regulatory provisions governing reporting on non-compliance of suspected non-compliance. Find it. Fine. Requirement under auditing standard, including those identifying, responding to fraud, communicating. So all these standards came again. Now, communicating with respect to groups. This is something very interesting. In case of consolidated financial statement, where a professional accountant becomes aware of non-compliance or suspected non-compliance in relation to component of a group, one of the subsidiaries not complying with the laws and regulation, where the parent company is listed or component is listed, in either of the following two situations, accountant shall communicate the matter to group engagement partner unless prohibited by doing so by law and regulation. Was it not my duty to communicate, as I have included it in my report, that there is a non-compliance, it is bound to be incorporated by the principal auditor or by the auditor of the holding company. So auditor of the holding company, this NOCLAR says me that if I'm auditor of a subsidiary and then I have found some non-compliance, in that case, I need to communicate the same to whom? I need to communicate the same to group engagement partner, who is the central auditor. If suppose something happens in the branch audit, we need to communicate it to central statutory auditor. The same thing they require to communicate it to the central statutory auditor. So, or the auditor of the holding company. Now, if accountant is for the purpose of audit of the group financial statement and all, so that requirement I have already taken care of. Now, where the group engagement partner, where the parent company or component is listed entity becomes aware of non-compliance or substantive non-compliance, the group engagement partner shall consider whether the matter might relevant to one or more component, and if he found that it is relevant, he must communicate to the same. Now tell me, Standard on Auditing 600 has the same provisions. SA 600 has the same provision. There is nothing different from that, sir. Why we are so worried about NOCLAR? I'm coming to that point, why we are worried also. If the non-compliance or suspected non-compliance might be relevant to one or more of the components specified in that group engagement partner shall take step to resolve the matter. If it is of group, then we need to cover about the group. The professional accountant shall assess the appropriateness of the response of the management, and where applicable, those shall be governance. I have communicated to management and those shall be governance, and I'm waiting for their response. Now comes, if no response is given. If response is given, we need to audit the response, whether the response is appropriate or not. But if no response is given, then if no response has been given by these, then what to do? Then I need to apply my audit procedure to obtain sufficient and appropriate audit evidence that really whether we have all such things with us, if all such non-compliance audit evidences are with us, if those non-compliance audit evidences are with us, then only we can report it to the report in our audit report. And if it is required, we need to give what we need to communicate it further to the authorities also. Sometimes it may happen that we may not obtain sufficient and appropriate audit evidence, and when it came to the management and those shall be governance, that auditor is after the non-compliance with law and regulation, they have stopped giving cooperation to the auditor, they have restricted the scope of the auditor, they are not providing information to the auditor, so auditor is unable to obtain sufficient and appropriate audit evidence about the non-compliance with the laws and regulation. What auditor must do in that case? If such is the case, then auditor has two different ways to deal with it. Either he should complete his audit and he should check out the magnitude of the non-compliance. If the magnitude of the non-compliance is material, but not pervasive, it is affecting the financial statement, but not so badly that it could distort the whole picture of the financial statement. In that case, what auditor has to do? Auditor will issue a qualified opinion. If auditor has sufficient and appropriate audit evidence that such non-compliance is there, auditor is unable to obtain sufficient and appropriate audit evidence that such non-compliance is there, and if the non-compliance is such a big amount which occupies and which predominates the whole balance sheet, in that case auditor will issue a disclaimer of opinion. So you have either you give qualified opinion or you give disclaimer of opinion, and if not at all you are not able to continue the audit, you can withdraw from the engagement itself. आप engagement से withdraw भी कर सकते. You can withdraw it from the this point. So important point is when we are talking about all such things, whether the professional accountant shall have this or whether the professional accountant has duties and all. So this is something which is very important, which we have to discuss. So what Shankarji and Ethical Standard Board asked me to give over this non-compliance. I'm dealing with that particular non-compliance. That non-compliance, you can withdraw from the engagement or you can give a disclaimer of opinion. It all depends on you. Now tell me, what kind of non-compliance, what point which I have discussed is bothering us? So let me discuss those points which are bothering us. So now I'm stopped sharing everything, and now I need questions or queries that what bothers us as non-compliance. I'm just asking this, that what is bothering us for non-compliance. If there is any question, I can really enjoy.
So the participants are not allowed to like unmute themselves.
Yeah.
This being a TV, so therefore they cannot ask that question which you.
But in chat box, if they are allowed.
Yeah, there are some questions in the chat box.
Yeah, tell me.
But the query which you raised about that non-compliance part, when you say that what is stopping them for this report in this non-compliance, the questions will be different from that.
Yeah.
So we have got a question of that, whether the provisions of NOCLAR is applicable to members in service. What are the precautions to be taken by members in services?
Yeah, member in service, we have a very different NOCLAR provisions. In case of members in service, the same set of provisions which we are having in this 300 series, we have the same NOCLAR provisions for service also. So what I said here, now what I was talking about as responsibility of management and those charged with governance, they are indirectly falling on you. So members in service, they are responsible for creating an environment that's supposed to give a support to compliance with laws and regulations. This particular management and those charged with governance are really required to maintain and design, implement and maintain an internal control system which ensures that there is no non-compliance occurred during the year. There must be a supervisory system to be there by the management and those charged with governance, which ensures that there is no non-compliance. CFO and CEO kind of persons will need to have statutory calendars, statutory schedules, statutory MIS, particularly to ensure that there is no non-compliance in their company.
So they're not required to sign it, sir.
Yeah.
They're not required to sign these MIS and all these documents.
No, there is no need to sign all these requirements on all that they have to supervise them. And then see what happens is, if there is a non-compliance, a question will be thrown on member who is in service, that how you ensure that, okay, this is non-compliance is there, no problem at all. Now employer is saying to that CFO or CEO that I have assigned you to take care of all these activities. What precautions you have taken for it? Now implementing the MIS, getting the MIS, taking action on those MIS is purely duty of person who is in service. And mind it very carefully, under our Chartered Accountants Act 1949, if suppose what example I have given about that particular manufacturing organization and manufacturing the drugs, in that case, if suppose I was a CFO or CEO of that company who was responsible for governing the entity, in that case, a question will be thrown to me from the audit committee that, Mr. Trivedi, what you were doing about when that particular thing, that these manufacturing activities started, you were part of the meeting where it was decided to manufacture that particular drug. How did you not comply with laws and regulations and all that? No, important is, if I say no, I was not aware about these laws and regulations, then what is going to happen? Then clause number 1 of the part 2 of the second schedule will come in picture and says that we have issued a Council General guideline that a member who is in service should exercise due diligence and should not be grossly negligent in conduct of his duties. So the same set of non-compliance will be applicable from, provisions of non-compliance are the same. There are two parties to it. One which implements this non-compliance so that no non-compliance could be there, and other one is to review that whether that non-compliance is there or not. That is the only fundamental clarity should be there, that there must not be non-compliance. It is duty of the chartered accountant in service, and there should not be instance of non-compliant remain undetected. Is the duty of the person who is auditing the same. Rest of the same provisions are the same only. There's nothing in law. So some laws and regulations which bothers me as a CFO or CEO of the entity is because I have been declared as a manager of factory. I have been declared as a manager of that particular factory shed. In that case, all safety laws and all workmen laws and all industrial laws and all factories act and all, if any single incident happens over there, there will be a prosecution clause on that particular person who is holding the position of the manager. That happened. One of our colleagues had been prosecuted for what? That carelessness, the safety measures have not been taken in one of the soya plant, where 3 workers have been died of entering into a drainage chamber. Now, this is called, and why he had been caught? Because he was sitting here in Indore. He was taking care of accounts in Indore. He never goes to factory, but he was designated as manager of the factory in the industrial records. So when you signed yourself as a manager, just forget it. Do not sign anything as a production manager or a manager of the factory or any officer in default. They will make you officer in default and they prosecute. So before signing any document for a government to be filed with the government, what your designation is there is very important. And just take care that what kind of designation they are giving and what that designation brings duties to you in industrial acts. Industrial acts are very severe right now. And if any mishappening is there, auditor is that particular member is responsible for the same. So that is a provision that care must be taken within NOCLAR also.
Right. So we have got next question.
Yeah.
Except for the large audit firms, for smaller firms or companies, the general refrain is that the audit firm will also take up tax assignment for reasons of economizing on the fee. How does this comply with the code?
Under section 144 of the Companies Act, it is allowed for us to be a tax consultant. No problem in that, but just we need to have a board resolution from the company or audit committee resolution from the company, and we can do tax consultancy service. We can give tax consultancy services to the organization. Now, what kind of tax consultancy we can give? If we say that we will prepare your computation of income, we will prepare your provision for tax, we will prepare your DTA, we will prepare your DTL, we will prepare your GST, we will feed your GST, we will calculate your GST, will pay your GST, will calculate the ITC credit, will file all your returns and all that. Now tell me one thing very honestly. When you are going to conduct the audit, how many figures in the financial statement you are saying that these are true and fair, which have been calculated by yourself? The maker and the checker is the same, and maker and checker could not be the same. It is bound to be different because there is a self-review threat. we can give all services to the client which are not creating a self-interest threat and self-review threat. Self-interest threat means the fees which we are receiving from the client should not be so magnificent or so material that it will negate the impact of the audit fees received as a statutory audit. If suppose my statutory audit fees is 15,000 and my tax consultancy fees is 45,000, then this is definitely bound to create a self-interest threat for me. So one has to be taking care of that also, that the fees which we are charging for the other assignment should not be more than the audit assignment. Non-audit fees should not be more than the audit fees. And second thing, which is important, if you are giving consultancy, give consultancy, but you should refrain from having self-review threat, that the figures of the financial statement have been calculated by you and audited by you. Then there will be a problem. Like a GSTR 9C in our office, that okay, the auditing requirement is removed. If it had not been removed, the most of the self-interest threat, self-review threat was there. We have prepared everything and we are checking the reconciliation also. So that's called self-review threat. They are saying that you should not assume the management responsibility. You can assist them in calculation, you can assist them in preparation, you can assist them in filing, provided they are non-audit clients. If they are audit clients, you can file return, you can file challan, you can assist them in filing and uploading the returns and on regular basis. But you cannot compute the things for them. And those things which you are computing coming again in the financial statement, you yourself are signing the financial statement, that will be a problem. In that case, we can address this threat that big partnership firms can have, or a proprietorship firm can have two different teams. But in proprietorship firm, two different teams cannot be taken separated. In case of partnership firm, one partner is taking care of the taxation division, other partner is taking care of the statutory audit division. Both engagement teams are separated, and quality control officer of the company is checking that the self-review threat should not be there. The persons who have been computed the provisions of depreciation provisions of the taxation, those provisions of taxation which are computed by one of the team of the audit firm, the other team of the audit firm was doing what? That other audit team is doing the audit. So there is no self-review threat alive there. But in case of a proprietorship concern, there might be a problem that we cannot prove that we have addressed the self-review threat. So self-review threat addressal is possible in those companies where we have different separate sections.
There's an interesting question. In an income tax raid on a company, a member who is the CFO is asked to sign on some submissions by the IT department. Although he mentions therein a disclaimer that he is acting on behalf of the company and not on his own account. Is he compliant with Section 360?
I'm not the right person to give answer to this particular question, because in case when to my in my opinion, what happens is, if particular CEO or CFO is required to sign on the Panchnama or the documents which are prepared by the tax authorities, and they say you sign it. Now you are signing in the capacity of CEO or CFO or on behalf of your client. So you are just an agent. You will not be held responsible for all the debt. But very carefully minded, I can sign on that information only when my employer has authorized me to do that. If I got a power of attorney from them that yes, you are you should represent us before the tax authorities and give all information to them. Then only we can give information to them, and we are just an agent. An agent will not be held liable for any information because these information are not mine. These information are from my employer. I'm just worried about the employer should not disown the information that I don't know about the income tax. Whatever be done by this CFO only, I am least bothered about the tax, and I'm not taking care about the tax, and he was only taking about the tax, and he conceived all these things. For that, we need to be very cautious. I always guide the youngsters when they are entering into service that do you have in your engagement letter specific terms where the authorities have been given to you. Mere giving designation by the HR department is not important. If HR department is giving you designation, if HR department is giving you duties, it should be formally in writing, and a copy of that will be in your safe, so that if suppose someone comes to you and says, give me information, you can show him, sir, I'm not authorized to give such information. I'm not authorized to sign. Sorry. And if say that we will get you authority, get me the authority from the person. Power of attorney, I'm signing it. No problem.
So there's a question on that. What are the documentation requirements for auditors in NOCLAR?
See, the same documentation requirements which we are having in standard 250, the same requirement we have. There is no specific requirement relating to NOCLAR.
In what circumstances auditor is required to disclose an event of NOCLAR to the authorities? In what circumstances?
See, if you found any non-compliance, first identify the nature of non-compliance. Whether that non-compliance with laws and regulation has been directed by the law to be directly reported to the authority without reporting to the entity. So we need directly to report to the authority. But as our section 143.12 says, that you first report to the board of director audit committee, and after 45 days get the answer from them, and then report to the authority. Report to the authority. Like that. Now, important is that when should I report to the authority? So it all depends the nature of non-compliance and the related concerned law, what it says. If there is a fraud, you got a fraud in income tax. Is there any section in income tax which requires you to intimate to the tax authorities that there is a severe tax evasion that's there? And if suppose there was a tax evasion and we just withdrew from the assignment, I'm just saying that if you found a non-compliance, serious non-compliance in tax, and you withdrew from the engagement, is it your duty to communicate to the tax authorities that I withdrew because of these non-compliance and serious tax evasions? Not at all. Barrister, attorney, pleader, vakil, and chartered accountants have got immunity under the Indian Evidence Act. And Indian Evidence Act clearly mentions that separation of evidence will not be applicable to these categories of persons because they have to maintain the confidentiality. So it's very clear in that part.
So we've got another question about whether the professional accountant is required to investigate presence of NOCLAR.
See, you are employee and you need to seriously verify that is there any non-compliance. Would you say it as an investigation? If you say it as an inquiry, whatever sort of this, it is your duty that no non-compliance should be there in your entity where you are responsible. That's the only thing.
So now this is technical. What is meant by appropriate authority?
Appropriate authority will always be defined by the act in which we have been appointed.
So it will change from
In case of section 143.12, they have said write it to Ministry of Corporate Affairs. Then they have given particular address that you have to give to regional directors. So if they have given in the act, they will give the address also that to whom we should say.
The last question for today: what is not in the scope of NOCLAR?
What is not in the scope of NOCLAR is personal misconducts of the person. If your board of directors is doing something fishy and it is his own fraud, his own frauds, we are not responsible for all such non-compliance which are done in personal. If suppose my employees are there, they are not filing their income tax return, how I can be made responsible for that? I have deducted TDS for them, and all TDS I have deducted and I have deposited in time. If they are not filing their return, how could be I made responsible for that? Unless and until income tax act imposes over the employer that if no non-filing of return will be there of employee, you will be punished. It's okay.
So these are the questions that has been asked. I am not having any more queries and questions further to this.
Okay.
But I feel, sir, after this deliberation, the most important part which I got out of everything was that self-review mechanism. Because I feel that is one thing which normally as an account, as a professional chartered accountant, we tend to, I will not say forget, but we just let it go on that. Because over a period of time, when that person asks the question about smaller and medium firms, so for big corporates, it's fine. For big corporates, definitely, whatever the things are there, it will be on that. But for smaller ones, this goes it like that. So I feel, but everybody has to take special care for that too. And this has been an excellent session by Asim sir. Much of the things which everybody used to use only the two first words, that is no. So I feel that the most important thing which we need to take out of this session is the first two words. Say no to some of the things when it is required to be said no. Yeah. Otherwise, the things will really go out of that. Sir, it has been a real privilege for Nagpur branch to have you here.
Really, it is my first session with Nagpur branch, I think, either yes, physically or virtually. Really, it's a wonderful session. Some of my friends are in Nagpur who are active member also. Mr. Farooq is there, and he's special person in indirect taxes. So it's good always.
It's always great, sir. It's always great. On behalf of the Ethical Standards Board, I convey my heartfelt thanks to you, sir, for an excellent presentation. And I also thank all the participants who are present in large numbers for this session. I also thank CS Sana Bakai ma'am for really covering the first part very methodologically, because that two words of no, we have learned the importance of those two words, no. And definitely I feel that when we will go out of it, we will be much more much more equipped as to what we should do and what we should not do. So thanks a lot to both the learned speakers. This has been a really good learning experience, not only for me, but for the entire more than 2,000 people who are attending this session. So thank you one, thank you all. Over to Team ICI, New Delhi.
Sir, thank you very much for the wonderful lectures. With this, sir, we can conclude the session. We thank you very much.
Thank you.